What's up, guys? Welcome back to another YouTube video. We're going to talk about GU. We're going to get straight into it, guys. It's going to be a simple video. We're going to talk about the market cycle that's been going on GU right now, the bullish market cycle. For example, here, GU, this is a bullish market right now. We have this low that made this high. So this is a bullish market, right? The structure here is bullish. This is 30 minutes. Let's go on the 1 hour time frame. So 1 hour time frame, zooming out a little bit, you guys can see this is a bullish market going towards the upside. So from this low to this high, this is a bullish market cycle. Now, inside of this here, inside of this up move here is our market cycle, right? So this right here would be a bullish market cycle going towards the upside. So now when the market does this, we have this invalidation of demand right here. Once the market does that, now we enter into a bearish market cycle stage. Even though the market is still bullish, the structure is still bullish, this internal price action, this internal structure has a bearish market cycle characteristic. So basically, all market cycle is that internal price action that's going on. And how do we, use that to our advantage? What is it for? Basically, we use market cycle to determine how bullish the market is and, how the momentum is moving the market. So basically here, we will follow the market cycle until it gets invalidated inside of our legs. So this is how we trade inside of our legs. This is how we trade this up move. This is how we trade these down moves and then going back into these up moves. So basically the market is just shifting. Right here we have a bullish market cycle, right? We create a new high, we go to a bearish market cycle, we come here and we mitigate this demand zone, and then the market creates an accumulation that sends us back into a bullish market cycle. And since then, we're still on a bullish market cycle right now, and we're following this bullish market cycle. Inside of this price action, you're going to see reaccumulations. If you don't know what Wyckoff is, please go back to the older videos, go back to the other videos and try to get yourself an understanding of what Wyckoff is, or just reach out to me on Instagram or anything like that, and we could have a more personal talk about it if you need like a personal live call or like a one-on-one with me or anything like that to kind of go through it in depth and explain everything. But we're here on G and we're going to cover some of these things, and I'm actually going to look at some of these trades and opportunities that kind of happen inside of here and just kind of explain it, and we're going to talk about what's been going on. Once you see we have this explosion towards the upside, we will continue following this to the upside, right? We're going to continue trading these manipulations, as you see right here, manipulation of these lows, and we're going to continue buying the market until we see this case right here. We actually took a loss here on this trade. We were looking for a trade within this manipulation, right? This is why I have this invalidation of demand here. We were looking for a trade within this. This is a clear trade. This is a right trade. There's nothing wrong with this trade at all. We have our manipulation. We have our impulsive move. We have our BMS at the high. This trade just didn't work. This is what I was talking about earlier. This just didn't align with the market conditions for this day. So this trade didn't work. We took a loss here, and then once we took this loss, once we got this invalidation of this area, this is where we start looking for the opposite trade, right? This is where we say, hey, the market is now going on a bearish market cycle. How do we know that? Because the market was in a bullish market cycle here when we were rating Asian lows, manipulating Asian lows and going higher. Manipulated, well, we didn't get too much inside of here, but the market was going higher and it was showing us reaccumulations to the upside, right? So now, once we get this invalidation demand, knowing that buyers are in control of this market and that we should be going higher, once we get this invalidation of demand here, we're going to switch our thought process of thinking, okay, maybe it's time for the market to retrace. So once this happens and I get invalidated off a demand zone, right? The first thing that comes to my head, reversal, right? We're starting a reversal opportunity. So once this happens, I automatically flip the switch and start looking for bearish continuations to the downside, targeting my demand zone. So first demand zone would be here, and then the second demand zone would be our origin, which is down here. And what you're going to notice, the market reacts off of this demand zone, right? And we give a push, and then we push even lower. We're following this bearish market cycle until it gets invalidated. Okay, even though the market came into our demand zone, we're not automatically stopping everything and saying, okay, now we're just gonna switch and stop looking for buys. No, we want the market to prove that it's gonna buy from here. So we've seen the market halt and we're waiting. We're looking at the market, we're waiting. We don't see any BOS, we don't see any change of character. The market struggled inside this area and we just ranged. Seeing that, once we see this impulse to the downside and we break this demand zone, we're taking sales to the downside. Okay, so going a little bit further up, this whole trend to the downside, this whole move to the downside, this is an example of bearish market cycle. What you're gonna see is you're gonna see the market rating Asian highs, right? We use these as our manipulations, right? These manipulations to the upside of Asian highs, we use these as our catalyst to take sales to the downside. Okay, so we're using these manipulations to take the market to the downside. This is a bearish market cycle. That's what I mean. So once we get into this demand zone here, we can see the market kind of just bounces around. We bounce around a little bit. Let me go down to the 15-minute real quick for you guys. Okay, we see the market just bounce around a little bit. Market bounces around. We don't get any change of character. We don't see any BOS. Our BOS is at this high. This is the high that tapped into our demand zone. So we need this high to get broken, right? In order for us to say that buyers are getting back into the market. We don't see that, right? We see the market just kind of stall right here. We don't see any buying pressure. We don't see any momentum. And look what happens. The market comes in and we see an explosion to the downside, breaking this demand zone. So this is an easy setup for me. Whatever was the catalyst that caused this break of this demand zone is going to be our next entry. So for example here, this is the last up move before we have this down push. This area here would be our supply zone to sell from. And you can see the market came right back. This is our New York session, came right back, mitigated this area here that invalidated our demand zone. And we can see a clear push to the downside. Boop. Clear push to the downside, and now we've entered into the origin. So once we've entered to the origin here, now this is where we become a little bit more patient and we're gonna wait. Why? Because now we're dealing with structure. Okay, this is why structure is important. Now we're dealing with structure, so we're not gonna be as aggressive in our selling as we were up here. Now once the market is up here, when the market is up here and we're starting this retracement, we can be super aggressive knowing that we're looking for the market to get into these demand zones, right? Now, this demand zone and this demand zone are not the same, okay? This demand zone is less probability than this one. Why? Because this is part of the origin, and we have an accumulation right here, an accumulation of orders. We have 1, 2, 3 drives. We have multiple drives inside of here. We're seeing this is a range that buyers were accumulating orders, and then we see the explosion towards the upside. This entire thing is a huge push to the upside. This is a major demand zone, and it's our origin of the leg that started this entire move. So we cannot say this demand zone and that demand zone has the same characteristics, right? So that's just one thing. This is the origin. This is a continuation move. Okay, the origin is always going to be your highest probability demand zone. Okay, so what happens when we get into this origin? We see an accumulation. So we see buyers getting into the market. The same thing we saw right here is what we're looking for inside of here. So this accumulation that you guys see, this range right here, look what happens right here. Buyers show themselves again. So that's what we're looking for in the lower time frame. Now we zoom in into the 15-minute, we go down here and we see what? We see this range happening here, and we see that buyers are accumulating orders. We're building liquidity, right? We raid that liquidity down here, and the market explodes to the upside. Now, what do you see happen? Now we get our change of character, right? Now that we've gotten our change of character, and you guys can see that the market cycle does not change until we get a change of character. So for us to go into a bearish market cycle up here, we needed this change of character, this invalidation of demand, which is a change of character as well. I'll change it to a change of character. Boom. Change of character. Okay, now we're going to a bearish market cycle. We reach a demand zone. We get an accumulation right here with a manipulation and a change of character. Now we're going into a bullish market cycle. So now what are we looking for? Now we're looking for buys. Now we can be aggressive on our buys. One, because we know, hey, let's look at our structure. So we're bullish. We're from this low to this high. We've gone into a retracement. We're back into our demand zone. What are we expecting? A new high, because we're expecting to continue this bullish market structure. So once we get this accumulation and we start seeing the market go on a bullish market cycle, this is where we're aggressive inside of this whole thing until we make this new high right here. That's going to be our main objective, because we're expecting the market to react from this demand zone and make a new high to continue the bullish market cycle, right? And the bullish market structure as well. So now, when we zoom into this price action, how does a bullish market structure look like? Well, you're going to see the exact opposite. So what we were looking for in this bearish market cycle was the market to raid Asian highs and for us to continue lower. Now we're looking for the market to raid Asian lows. For example, here, Asian lows got raided, market pushes higher. We don't always raid Asian lows, of course, but you're going to see it happen. We left all this liquidity here. Okay, cool. Now this is a setup that we actually took in here, and this is kind of just off of a reaccumulation. So this is going to get a little bit more in depth, but I will show you guys this for a little bit. So we have this here. We have the this area right here. You can see the market is creating this price action that's going to the downside, invalidating these highs, seeing this explosion, right? We're getting a break of market structure, push, we have imbalance, and look what we come back into. We come back into the imbalance. The market engineered liquidity right here. Boom, all of this liquidity. We have the manipulation that mitigates this area right here, which gave us that push to the upside, and then the market continues pushing again, right? Boom, continues pushing again. Same thing, this exact same thing happens again, guys. The exact same setup. Let's go down to the 2-minute time frame. It's the exact same setup, so it happens again the next day. We have our distribution at the top. Right here, you can see the market opens up. This is London session. We get this down move to the downside, and then boom, we explode, creating this break of market structure, invalidating this high, which initially showed us a distribution. And the reason why this is important, you can see I highlighted this square here, and I did it on the other one, is because this distribution shows us potential sellers, right? We're in a bullish market. So if we're seeing potential sellers in a bullish market, we know it's a fake move. So once we get this explosion to the upside that invalidates that fake move, we know it's go time, right? We're looking for the market to come back into this area, knowing that this is a manipulation. And look what happens. We can put this as a demand zone. Boom, there's a mitigation right there. Entry comes off of this, market explodes. Same thing happens again, guys. This is the same setup. Here's a distribution again at the high. Market pushes lower, mitigating our previous area, explodes to the upside. All right. Next day, we have the same thing. We have the distribution at the high. Market pushes lower, explodes to the upside. And if you don't understand Wyckoff and you don't understand like the market cycle in the structure, you're going to fall for these fake distributions. I don't want you guys falling for these fake distributions. This is why understanding what the market cycle is. If you're in a bullish market cycle, you're looking for reaccumulations. So when you see these fake distributions and these fake moves like this, thinking the market is going to sell, all of this is a fake move to create liquidity and to induce more sellers. The more sellers we can induce, the more buyers that can get into this market and continue pumping this market to the upside. In a bullish market cycle, we're looking for these fake moves to get invalidated with this bullish push for us to take entries. You can see I was already looking to take an entry off of this area already. And the market continues pushing, right? We continue pushing to the upside. We're going to continue creating these fake distributions with these manipulations and continue pushing to the upside. Same thing that happens here. Market creates that fake distribution, acting like it's going to start selling. We come lower, manipulate the lows, and we push higher again. This is the same thing. It's going to happen over and over again. And we continue to follow this. This is what a bullish market cycle looks like. The market is going to create those fake moves at the top, the fake distributions at the top, and then explode through them. You're going to see that happen continuously. These are called reaccumulations. This is what I look for in a bullish market cycle. It's the exact opposite in a bearish market cycle like we were talking about earlier. Let's go back to the 30 minute that we were talking about earlier as we were trying to sell this market. So just trying to show you guys an insight of, market cycle and understanding this price action, and just reviewing what's been going on GU lately. I mean, this has been great. Bullish market cycle, the price action has been good. So hopefully you guys understand that. If I need to make like a more in-depth video of explaining market cycle and everything like that, I just wanted to introduce you guys to the idea. Let me know what questions you have, and then I will create videos based on those questions explaining more in depth for you guys and trying to give you guys more insight on how to read this internal price action and how to get yourself into these trades when the market is inside of these legs and creating these little moves. Okay, so I will see you guys in the next one. Let me know, guys. Give me the questions so I can answer it for you. I will see you guys in the next one. Peace out. Subscribe, like the video, follow me on Instagram if you need to. Peace out.